Sri Lanka's golden beaches normally attract millions of tourists, but that source of income was cut off by the pandemic. Its economy is suffering. Bond ratings have been downgraded, and economists fear it could soon default. It's not alone. The coronavirus pandemic has driven total global debt to its highest level in more than half a century, according to the World Bank. Debt levels were already high, but the pandemic has hit developing nations hard, according to Rebecca Greenspan, Secretary General of the United Nations Conference on Trade and Development, in an interview with VOA.
You have them building up their debt and their export earnings not being enough to pay for their debt load. So this situation is really dramatic already for many of these countries.
Figures from the International Monetary Fund show Ethiopia, Tunisia, Argentina, El Salvador, Ghana, the Republic of Congo, Tajikistan and Mozambique are also at high risk of default. Lebanon, Suriname, Venezuela and Zambia have already defaulted on their sovereign debt. Many developing nations took out loans during the pandemic. They now face big repayments, estimated by the World Bank at $35 billion in 2022, an increase of 45% on the previous year, with almost half owed to China. Meanwhile, economic growth forecasts have been cut.
For the first time, the rate of growth of the developing countries is less than the rate of growth of the developed countries. So in terms of the sustainability of this debt burden, we are in a very high risk space.
The group of 20 leading rich and developing nations froze some debt repayments during the pandemic.
It is in the right direction, but it has two problems. One is that it's a suspension, so the countries will have to start paying in June this year, while the crisis is not over. And secondly, that the impact in terms of debt servicing with respect to the total debt servicing of the developing countries is very, very small.
The G20 has also proposed a debt reduction program, but so far only 3 countries have come forward for help.
Many countries don't want to come in because they will be punished by the markets. And if they are punished by the markets, their access to private bonds and the possibility of to go to the markets to finance themselves will be really hindered.
The warnings of a debt crisis come as borrowing costs rise sharply, with central banks ramping up interest rates to tackle inflation. Greenspan says creditor nations must take urgent action on debt relief and financial aid. The alternative, she warns, is a lost decade for developing countries. Henry Ridgwell for VOA News, London.